Hey Tim,
Oh,
can I ask you a quick question?
sure, Shay. Yeah, no worries.
What's a comparison rate?
What's a comparison rate? A comparison rate is something that was brought in a little bit before I started being a broker back in 2004. And the idea of it was that at the time, a lot of lenders charged application fees, deferred establishment fees or early repayment penalties, and ongoing fees, and weren't necessarily clearly quoting them. And so customers would look at the interest rate, assume it was a particular deal, and then not realise what other fees were there. The idea of a comparison rate was that if you factor in all those fees into what the rate would be, if everything you were going to pay was all charged as an interest rate, that would give you an apple that you could compare with another apple, compare apples with apples on two different loans. If the overall cost is reflected in something as simple as an interest rate in both. That's the theory of it, and that's why the law was brought in to say every time you publish an interest rate on a home loan or any personal finance, a comparison rate has to be published at the same time. The problem with it though is that the rules around that were that when you calculate the comparison rate, you need to calculate it as if the loan was $150,000 and the loan term was 25 years. Most loans these days are 30 years and the loan amount's about 3 times that. So I find for that reason and a few others, namely that it doesn't necessarily factor in all the pros and cons of different loans, whether or not it includes an offset account, whether an annual package fee includes a credit card and that sort of thing as well. I find because of that, it's actually quite misleading to look at a comparison rate as a way of assessing a loan. I personally prefer to look at the actual cost over a period of, say, 3 years or 5 years, or even 30 years sometimes if you're planning on not doing anything to change things over that whole time. And I'll figure that out with a spreadsheet sometimes for my customers. I actually look at how much would the interest rate be over 12 months, what would the fees be over 12 months, and what do you get charged if you do something to change it, and then you can actually compare things properly. So I suppose the comparison rate is a very crude way of doing that, and it's probably quite a misleading way of doing that, unless you are actually applying for a $150,000 loan over 25 years, which I haven't seen one of them for quite a long time. So that's what a comparison rate is, and that's what I think of it.
Thanks so much.
No worries.